Welcome back to Click Capital, your go-to channel for all the latest market data analysis and charts. And a similar day to yesterday, bit of green breadth out there. We popped up again. Now got the SP 500 at 40.50, and the NASDAQ was the winner today. We actually got above this resistance line we've been watching on high highs and high lows today, although on really low volume across the board there as well. Looking at the heat map, it was mostly green, not as green as yesterday. We did see those financials come off a bit. They didn't participate in the rally today. And just a little bit of a lift, not too big. The mega cap tech was kind of flat. Amazon did a little bit better. And REITs did okay as well today. We had jobless claims come in today, a little worse than expected. Not a whole bunch worse, but it could be a sign that the jobs market is slowing down, starting to tighten. And tomorrow we've got the personal income and personal spending figures to look at. Fear and greed just ticked up a little bit here today, almost into the neutral zone. And calls, still a lot of people buying calls out there. We've got a low put call ratio today. Another 1.6 million contracts on Tesla, 58% calls. Amazon, Barber, and Intel as well. A lot of call buyers out there. Dark pools pulled back a little bit yesterday and still in a bullish mode supporting this market. Insiders, not so much. Corporate insiders have been pulling back their buying, and the probability of we getting a hike at the next meeting is now 50-50. And we've got SPY max pain a bit lower now at 397 coming into tomorrow. Next week we've got it at 396, and going into the week after that 395. Big short investor Michael Burry says he was wrong to say sell. So some of you might remember on Jan 31 he just did a tweet that said sell, and he's been really bearish on the market for a host of reasons. But apparently he's flipped his tune and is now jumping on the bull train with a lot of other people. And here's a chart of the buy and the dip. S&P's average return the day after it declined. So we can see that is coming back into force now. The buy the dip appears to be working. And Russia plans on practicing some ballistic missiles. So Putin just keeps on stepping it up. They're stopping to share missile test info with the US. And apparently China is preparing for war. So I wouldn't be surprised if they invade Taiwan at some point over the next couple of years and get Russia to help. And what does this all mean for us investors and traders? We want to be long the assets that could benefit from that. So I think that is going to be commodities. And here's an interesting chart I wanted to show you today. It's the commodity index versus the S&P 500. And we're at record levels for how cheap commodities are versus stocks. You can see this ratio. The long-term average is probably somewhere around 4. And we're just under 1 now. And that's come up hard the last couple of months. And you can see going into the oil crisis in 73, 74, what commodities did relative to stocks, and the Gulf War in 1990, and the financial crisis as well. So this chart is part of the reason why I really like commodities. And I'm plan on probably being long commodities for many more years, maybe even a decade or longer, as I think we will eventually get back up to this level of 4 on a ratio because of the geopolitical tensions and supply being constricted from all the clean energy policies. That's going to restrict traditional commodity supply and investment. So I think all that, along with the growing world population and all that, is a strong tailwind for commodities, and they're historically very cheap. And even though the housing market is looking like it's holding up because most people have fixed rates, the problem is with new purchases coming in with these high rates. And so there's been a 39% year-over-year decline in mortgage purchase applications, and now this is at multi-decade lows. So that's a huge headwind for the housing market in general. Okay, so looking at the charts today, we've got the SP above the 50, the equal weight still just below it, NASDAQ now breaking out to new highs, Dow just got above its 50 today, mid-cap's not, and small's not as well. Looking at internationals, Canada, England, Germany's now above its 50, so is Japan and Australia. and China just a little bit as well. So it looks like we're flipping into bullish mode here, getting a bit of global equity breadth. And funny enough today, with that equities climbing up, we actually had volatility come up a little bit here today. So it looks to have stalled out a little bit here. And we had bond market volatility come off a little bit, but still the premium between bond market and equity market volatility is elevated. And the put-call ratio at 0.84 on equity only. So not much fear out there. And what we have seen a bigger jump in is breadth. If we look at this, this is yesterday's data. 60% of stocks now above the 20-day average. 50-day, 37%. And 200-day, I can imagine today that's gone over 50%. So this is flipped pretty hard now. So stocks appear to be regaining ground, and we can see new highs creeping up a little bit as well. So there's a bit of breadth coming back into this market, and we can see that in the spreads with gross cyclicals versus defensive. Still got equal weight, pretty depressed down there. High beta stocks are still under pressure versus low volatility stocks, and growth versus value is strong and holding on up there. Same with NASDAQ as well versus smalls, and the yield curves pulled back a bit as well. And money coming back into the risky end of bonds. We can see this here on junk bonds versus investment grade debts climbing back up, and the 2-year just settling down a bit here at 412, and the 10-year at 354 as well. Fed fund futures climbing up a little bit here, and treasuries as well holding above their 50, and high yield putting in really strong moves here above its 50. So market seems to have really calmed down and trying to put this banking crisis in the rearview mirror. But that's not showing up in financial stock price action, which I'll get to in a bit. Dollar's coming off a little bit and appears to be under attack from China, Russia, trying to rope in Saudi Arabia, Brazil, and every other country they can to get off the US dollar. So that's an interesting dynamic going on there. And Bitcoin looks to have hit this resistance zone and pinged off it. So it looks to be consolidating and can't break out above that 29,000 levels, acting a bit of a roof there. And commodities holding there, just sitting at their 50. And copper as well, consolidating above its 50. And gold, high, low today, still looking good. And oil up pretty good today, above its 50, 1.8%. So commodities are looking good again. And over to the stock sectors. So still a little mixed out there today. Biotech has just been swinging all over the place, doing its own thing. And the regionals still trying to find a bottom here. And the financials, so still a lot weaker than the rest of the market. And semis had a good day as well, just breaking out sneakily to new highs here today on a small range bar, as well as the tech sector. And defensives not doing too much, just pretty quiet, flat overall today. BlackRock holding up, JP Morgan coming off a little bit, and mega cap tech just sitting above those big resistance zones here. So is this a new breakout for the NASDAQ tech rally? Can this keep going higher and higher? We got Nvidia trading up here as well, but again on low volumes, so there's not a whole lot of force behind this move. So we'll see whether this can last, but things appear to have really calmed down from last week. So still no strong signs of a top in the semis just yet, and Netflix trading really strong here, and Tesla just still consolidating around its 50. Over to meme stocks, looks like Bed Bath Beyond is going under, now trading at 59 cents a share. Carvana had a little pop, overall a bit mixed out there. And over to the banks, Deutsche Bank holding up there, First Republic and PacWest and Western Alliance. Still haven't had that big dead cat bounce, and same with the big guys as well. Citigroup has popped up a bit, but Wells and Schwab still trading really depressed. There's a lot of questions being raised about Schwab here, even though the insiders have been buying. A lot of people are saying that they're in trouble, so it's too hard to say. I think that warrants a deep dive, but it's still such a fluid situation. It's hard to tell whether Schwab is going to be a good buy down here. Okay, so that's a bit of a quick look at what's going on out there in the market. It's not too much exciting, just another kind of slow grinding day higher as we've been suspecting. NASDAQ looks to have broken out, but the only interesting thing to say today is really it's just on low volume. There's not much volume in this move higher. And if we look at the global net liquidity model, we're now a bit higher than that. But this Fed balance sheet expanding, I think, has really supported the market and backstopped the market. And we've got VIX down there really low. So it's just a funny, quiet market grinding higher. Really hard to position strongly one way or another. So again, I'm just keeping my personal swing trading portfolio as market neutral, equal amount of longs and shorts, and going to stay that way for quite a while until we actually get a decent move and the market resolves itself in one direction. But that's it for today. Not much else to report out there. And thanks for stopping by. We'll see you again tomorrow for the last trading day of the week. Cheers.